Hello and welcome. Today, I'll be teaching you the basics of the Forex market and Forex trading. This podcast aims to provide you with the necessary information to step into the world of Forex in a fun and understandable way. While you can find this information elsewhere, let's face it, most of it is scattered and quite boring. I'll try to make this podcast as engaging as possible so you can learn about Forex trading while having a good time. By the end of this podcast, you'll have a solid understanding of the Forex market and Forex trading, and you'll be ready to move on to learning real-world Forex trading strategies. If you're ready, let's get started. What is the Forex market? First of all, what is Forex? Forex stands for foreign exchange and refers to the currency market. The Forex market is where banks, businesses, governments, investors, and traders come to exchange and speculate on currencies. The Forex market is also known as the FX market, currency market, foreign exchange market, or foreign currency market, and it is the largest and most liquid market in the world with an average daily turnover of $3.98 trillion. The Forex market is open 24 hours a day, 5 days a week, with the most important world trading centers located in London, New York, Tokyo, Zurich, Frankfurt, Hong Kong, Singapore, Paris, and Sydney. It's important to note that there is no central marketplace for the Forex market. Trading is conducted over the counter. It's not like stocks where there is a central marketplace. Forex is a product quoted by all major banks, and not all banks will have the same price. Broker platforms take these feeds from various banks, and the quotes we see from our broker are an average of those prices. The broker is the one effectively transacting the trade and taking the other side of it. They make the market for you. When you buy a currency pair, your broker is selling it to you, not another trader. A brief history of the Forex market. Now, let's dive a bit into history. In 1876, the gold exchange standard was implemented. Basically, it stated that all paper currency had to be backed by solid gold. The idea here was to stabilize world currencies by pegging them to the price of gold. It was a good idea in theory, but in reality, it led to boom-bust patterns which ultimately caused the demise of the gold standard. The gold standard was abandoned around the beginning of World War II as major European countries didn't have enough gold to support all the currency they were printing to pay for large military projects. Although the gold standard was eventually dropped, the precious metal never lost its place as the ultimate form of monetary value. The world then decided to have fixed exchange rates, which resulted in the US dollar being the primary reserve currency and the only currency backed by gold. This system is known as the Bretton Woods System and was established in 1944. In 1971, the U.S. declared that it would no longer exchange gold for U.S. dollars held in foreign reserves, marking the end of the Bretton Woods System. The breakdown of the Bretton Woods System led to the general acceptance of floating foreign exchange rates in 1976. This was effectively the birth of the current foreign currency exchange market, although it did not become widely electronically traded until about the mid-1990s. What is Forex trading? So, what is Forex trading? Forex trading, as it relates to retail traders like you and me, is the speculation on the price of one currency against another. For example, if you think the euro will rise against the US dollar, you can buy the euro to US dollar pair low and hopefully sell it at a higher price to make a profit. Of course, if you buy the euro against the dollar, euro to US dollar, and the US dollar strengthens, you will then be in a losing position. Therefore, it's important to be aware of the risk involved in Forex trading, not just the reward. Why is the Forex market so popular? Being a Forex trader offers the most incredible potential lifestyle of any profession in the world. It's not easy to get there, but if you are determined and disciplined, you can make it happen. Here's a quick list of skills you will need to reach your goals in the Forex market. and the ability to take a loss without becoming emotional. Confidence to believe in yourself and your trading strategy and to have no fear. A dedication to becoming the best Forex trader you can be. A discipline to remain calm and unemotional in a realm of constant temptation, the market. Flexibility to trade changing market conditions successfully. Focus to stay concentrated on your trading plan and not stray off course. A logic to look at the market from an objective and straightforward perspective. Organization to forge and reinforce positive trading habits. Patience to wait for only the highest probability trading strategies according to your plan. A realism to not think you are going to get rich quick and understand the reality of the market and trading. Savvy to take advantage of your trading edge when it arises and be aware of what is happening in the market at all times. Self-control to not overtrade and overleverage your trading account. Who trades Forex and why? Now, let's look at who trades Forex and why. Banks. The interbank market handles the majority of commercial Forex transactions and large amounts of speculative trading each day. Some large banks will trade billions of dollars daily. Sometimes this trading is done on behalf of customers, but much of it is done by proprietary traders who are trading for the bank's own account. Companies. Companies need to use the foreign exchange market to pay for goods and services from foreign countries and to sell goods or services in foreign countries. A significant part of daily Forex market activity comes from companies looking to exchange currency to transact in other countries. Governments/central banks. A country's central bank can play an important role in the foreign exchange markets. They can cause an increase or decrease in the value of their nation's currency by trying to control money supply, inflation, and/or interest rates. They can use their substantial foreign exchange reserves to try and stabilize the market. Hedge funds. Around 70 to 90% of all foreign exchange transactions are speculative. This means the person or institutions that bought or sold the currency has no intention of actually taking delivery of the currency. Instead, the transaction was executed with the sole intention of speculating on the price movement of that particular currency. Retail speculators, you and I, are small cheese compared to the big hedge funds that control and speculate with billions of dollars of equity each day in the currency markets. Individuals. If you have ever traveled to a different country and exchanged your money into a different currency at the airport or bank, you have already participated in the foreign currency exchange market. Investors. Investment firms that manage large portfolios for their clients use the FX market to facilitate transactions in foreign securities. For example, an investment manager controlling an international equity portfolio needs to use the Forex market to purchase and sell several currency pairs to pay for foreign securities they want to purchase. Retail Forex traders. Finally, we come to retail Forex traders, you and me. The retail Forex trading industry is growing every day with the advent of Forex trading platforms and their ease of accessibility on the Internet. Retail Forex traders access the market indirectly, either through a broker or a bank. There are two main types of retail Forex brokers that provide us with the ability to speculate on the currency market: brokers and dealers. Brokers act as an agent for the trader by trying to find the best price in the market and executing on behalf of the customer. For this, they charge a commission on top of the price obtained in the market. Dealers are also called market makers because they make the market for the trader and act as the counterparty to their transactions, quoting a price they are willing to deal at and are compensated through the spread, which is the difference between the buy and sell price. Advantages of trading the Forex market. Let's talk about some advantages of trading the Forex market. Forex is the largest market in the world with daily volumes exceeding $3 trillion per day. This means dense liquidity, which makes it easy to get in and out of positions. A trade whenever you want. There is no opening bell in the Forex market. You can enter or exit a trade whenever you want from Sunday around 5 p.m. Eastern Standard Time to Friday around 4 p.m. Eastern Standard Time. Ease of access. You can fund your trading account with as little as $250 at many retail brokers and begin trading the same day in some cases. Straight-through order execution allows you to trade at the click of a mouse. Fewer currency pairs to focus on, instead of getting lost trying to analyze thousands of stocks. Freedom to trade anywhere in the world with the only requirements being a laptop and internet connection. A commission-free trading with many retail market makers and overall lower transaction costs than stocks and commodities. Volatility allows traders to profit in any market condition and provides for high-probability weekly trading opportunities. Also, there is no structural market bias like the long bias of the stock market, so traders have equal opportunity to profit in rising or falling markets. While the Forex market is clearly a great market to trade, I would note to all beginners that trading carries both the potential for reward and risk. Many people come into the markets thinking only about the reward and ignoring the risks involved, which is the fastest way to lose all of your trading account money. If you want to get started trading the FX market on the right track, it's critical that you are aware of and accept the fact that you could lose on any given trade you take. All right. That's the end of our podcast today. You've learned the basics of the Forex market and trading. If you're ready to move on to more advanced Forex trading strategies, don't miss our upcoming episodes. Remember, the key to becoming a successful Forex trader is knowledge, discipline, and hard work. Good luck and happy trading.